Welcome back to Be Productive. Today we are talking about efficiency, but not just business efficiency, but efficiency when it comes to streamlining our processes and taxes. We all have to pay taxes. And even though those can be overwhelming, there are some great tips to help us save money, but also again streamline those processes so that we can really show up at the highest level of productivity. And to help with this conversation, I have my friend Ryan Conn, who's actually in our home studio in Houston. So Ryan, welcome to the show.
Thank you for having me. Very excited to be here and on air with you.
Yes, definitely. So, people get overwhelmed with taxes. And, we hear that word, and oftentimes people start to cringe. But, it doesn't have to be that way. And what I would love to talk about first is for small businesses, entrepreneurs, leadership teams, what are some of the key tax saving tips that we need to be aware of?
That is a great question, and that is something that I really try to hammer home with our clients as we onboard them and begin that relationship with them. And it is so important that from the very beginning, you understand the difference in entity selection on how you're going to be taxed as a corporation or potentially as an individual. A lot of people think that just getting an LLC or an Inc. behind their company name is a tax status. Well, that's really just a legal recognition status that separates you legally from a corporation. The entity selection is what really determines how you're going to be taxed by your state and the federal government. So there are things like S corporations, C corporations, partnerships, joint ventures, Schedule C's, E's, and F's, and all of those different things have different implications to them. So let me give you a quick for example. If you don't make an entity selection, you and your partner go into business, then you are a legal partnership. And that comes with a certain tax liability. So if you go and you're making $100,000, $200,000, $300,000 in your first year or so, you have to pay self-employment tax, and that's an extra 15.3% tax that you could have avoided or at least reduced dramatically. So why throw away $15,000, $30,000, $45,000 every year in your hardest beginning years when you can make an entity selection that avoids that tax or reduces it into a different category dramatically? So with that amount of money, most people realize that I could be tax efficient and invest back in myself, just to name one category.
Exactly. And it is so overwhelming just for the average person. And we hear so many different things. So being able to work with a strategist like yourself to really guide us through to make sure that we're doing the right things. Because like you said, we want to be investing that money that we've made. We want to invest it back in ourselves. So we've talked about, knowing some of the entities and how that can help us with the deductions. But let's talk about optimization. How can we optimize some of these deductions to allow us to work at a higher level of productivity?
That is a great question. Let me tell you about the process that reveals the optimization. And so that process is we'll take anybody that comes in our door through an evaluation first. And what we do is we just use a vehicle metaphor. We pop the hood of your engine, your business that you're driving down the road. And you know that your business is driving, it's cruising, it's getting you from A to B, and it's an effective vehicle. But what you might not know is that your tires are out of alignment. You're only firing on 7 of your 8 cylinders. You're leaking some oil. You may have problems and not truly realize it. So we find a lot of people are just hemorrhaging money to the government, and we're here to stop the bleeding. So we look underneath the hood, we examine that engine and say, here's all of these tax categories that you can use. And let's say there's probably 14 or so primary categories that affect every business owner. And they're not all going to have problems in all 14 areas, but you may have these 5 and you may have these 7 or 6. So we create a custom plan that addresses each of them in a step-by-step process for you. Some of those areas are often going to be things like reasonable and ordinary expenses. You may not realize that something that you're paying for personally could actually be a business expense because your industry considers that reasonable and ordinary. There are things like home offices and how to depreciate assets and what assets you can use. A lot of entrepreneurs are smaller family businesses, or at least started that way, and have family working in the business. So you can pay children for real work and actually offset tax pretty significantly. There's whole hosts of fringe benefits like health insurance, life insurance, cell phone stipends, fuel, gas mileage logs, and things like that that can help not only you but your employees, and then create a tax-free shelter for you. So there's a lot going on, and that really needs to be examined by a professional in the field that can point them out to you and then hopefully hold your hand through success in implementing the changes that reduce those tax areas.
So what I'm hearing is I could put my son to work for me and I can write off my shoes. Is that true? That's what I can do.
So that's
But
the, go ahead. Sorry.
no, I was just going to say, I think it's so good. And I know that I'm, joking around with you on this, but we do not realize these things. And again, based upon how we are set up on the front end, there are so many things that we don't know about. And again, another reason why we have to do our due diligence, because, having these itemizations, we could save us tens of thousands of dollars over the course of the time that we are in business. So again, another really important way to do this. Now, I want to talk a little bit more about this idea of staying productive. We have to make sure that we are planning, forecasting. So talk to me a little bit about how, looking at the tax efficiency model and how strategizing for this, how forecasting is really going to help us in effective planning, which then therefore will allow us to work at a higher level of productivity long term.
Yep, absolutely. That's paramount. What we do is I draw pictures, and believe me, I am no artist, but I just don't let that stop me from drawing. When we go through some of those initial client meetings, I draw a picture of their future about how they're going up and to the right, and they're getting these gains, they're getting into profits, but their problems and their taxes are growing right along with their success, right? So we optimize that by driving those problems, those taxes, those inefficiencies to the ground, so that now there's a huge category between problems, tax, and your success, and that newfound value can be plugged back into you. So the really important part to this is when you go through the optimization steps, you identify what is right for you. And let me give an example of when we actually failed with one of our clients first and how that rocked the boat, but we later brought them to success. We had a client that was a multiple business owner. They owned multiple entities and structures, and one of the things they did was flip houses and real estate. That was a side gig effectively for them. And so they came to us and had a huge tax liability problem, and they were shouting out, hey, reduce taxes, reduce taxes, reduce taxes. So we went in there and we proactively applied as much of the tax code as was legally available to their situation and drove their taxes to the ground. By doing that, they showed a lot less net revenue. So they appeared to gain every tax advantage in the book that was appropriate for them, and it drove their taxes to the ground. Well, now to flip houses, they need to be able to get a loan in a line of credit and be able to buy the house and then flip the house, and the banks were telling them no because
Right.
we listened to their goal of reducing tax, but didn't look at the big picture of how to, well, you're going to have to pay some tax. We're not going to take every single advantage in the book because that's going to drive your profits to the ground, and the banks don't like that. Those are mutually exclusive. Paying low amounts of tax, which are maximizing deductions and showing a low net profit, is usually the opposite of what a bank wants. A bank wants you to be making money hand over fist with powerful cash flow so they can loan you whatever money you want. And there's a balance to be had in there. That's where the optimization comes in. And without a tax planner, they would have either continued to pay exorbitant amounts of taxes they never really and truly owed, or they would have been super aggressive and never able to accomplish their dreams by flipping and building more houses. And an advisor dialed them in.
Yeah. What you're talking about today really hits on some really important topics. And I'm hoping that the people watching this are getting this, because when you are working with somebody like yourself, we need to look at those as strategic partnerships. And again, that they are our trusted advisors. And one of the things that you just hit on really strongly is the fact that your trusted advisor needs to know your long-term vision. That's something that I work on with my people, because you're absolutely right. So many people on the front end are like, save me money, get me as many tax credits and deductions as I can. But that's not going to put them in a position to really achieve the long-term goals. So this is why it's so critical to bring in a partner like yourself, sit down and really do, not just one time, but every year, do those, I guess, audits together, again, sharing the goals, walking through the vision so that you can adjust it along the way so that everything is in alignment. So Ryan, thank you so much for all of these. Now, before we go, I want to share, because you have something exciting going on. You're actually getting ready to kick off your own show here at Now Media TV. So tell us a little bit about your show.
Well, thank you. I appreciate the free plug. It's called Pivotal Change, and it's all about getting entrepreneurs and business leaders to gather around a platform where they can get advice from strategic leaders, from entrepreneurs that have had successes and failures, and what to do and what not to do, and encourage you along the way to build your better growth in your business and in your personal life. And it airs at 6 p.m. Central Time on Thursdays.
That is fantastic. Well, you are just a wealth of knowledge. Every time I have you on, I learn so much. I take a lot of notes of things and questions that I need to ask because, again, we need to be, as business owners, we need to be proactive, in also sharing and asking the right questions because, like I mentioned, it is a partnership. So for all of you at home that are watching, again, take these notes. Make sure you're asking these questions of your tax and financial professionals. And if you're looking for someone to guide you through, please reach out to Ryan. And Ryan, where's the best place that people can find you?
So you can find us at our phone number, 270-442-6688, and that actually gets you to both of the businesses. CS Business Consulting, which you see on the screen, which is csbizcon.com, csbizcon.com, and then the tax planning side of things is Shelton Associate CPA at wmscpa.com.
Love it. All right. Thank you so much, Ryan. And for all of you watching, stay tuned because we're going to be right back with more Be Productive.